All right, welcome everyone to week 6 of our Coping with COVID group. It is so nice to see so many familiar faces and a handful of new faces as well. I saw a whole lot of new registrants show up in the past few minutes or so. I probably have not incorporated your questions yet, but I promise I will make sure they are in our conversation next week. So thank you all for being here. I am enjoying the interaction on a regular basis and the ongoing Q&A and some of the dialogue that's happening via email. So thank you. For those of you that don't know me, my name's Elaine, and I have the privilege of working with artists and arts organizations all over the country in helping the creative industry with the business side of creativity. And lately, that has involved a whole lot of additional questions around unemployment and the PPP program and short-term and long-term planning, and many of the same things we've been talking about in these weekly sessions. These are being recorded, and so you'll receive a link to the recording afterwards. And if you've missed a few weeks or you need me to resend any of those other recordings, just let me know. They are out on YouTube, but they're unlisted, so you do need the link to get to them. But I am happy to share them with you, of course. And of course, this information is for educational purposes only. This information is changing on a very regular basis, so definitely know that this is not official tax or legal or accounting advice. So for today, a lot of the questions that were coming in last week, after last week's session, as people were re-registering, had to do with unemployment. A number of states went live with their unemployment process either towards the end of last week or they're getting really close to going live with this pandemic unemployment assistance piece. So I thought it made sense to spend a lot of our time focusing on that. And then because the Congress passed additional funding for the PPP program late last week, applications have reopened for that today, based on my understanding. And I'm pretty sure the money hasn't run out yet, although it might be getting close. So I thought it might make sense to look at that application one more time in case any of you were preparing to apply for that second round of funding. So let's start with unemployment. I think it's interesting to sort of highlight just a few overview pieces about unemployment. Many of you may never have been part of the unemployment system before because it generally doesn't apply to those who are self-employed. So it's worth pointing out that unemployment is governed at the state level. And that means every state is kind of rebuilding its process to accommodate the extra individuals that are now eligible. In general, like in normal times, there's a 1-week waiting period. So you become unemployed and then you have to wait at least 1 week before you apply for benefits. That, of course, has been suspended under the CARES Act. There's also a requirement under normal circumstances that you must be actively looking for work, and different states define that differently. In some states, you have to register for their job search website. You have to be going to job fairs or applying for jobs or going to interviews, right? That requirement has also generally been suspended, but in some cases, you still have to answer the question that yes, you are actively looking for work, even though that requirement has been suspended. So that's an example of how the system isn't really keeping pace with these new requirements because the systems are old and dated and everyone is trying to nimbly respond to these things while working remotely. Also, in general, unemployment can last for up to 26 weeks, although, as we know, there's an extra 13 weeks of eligibility that has been tacked on as part of the CARES Act. So again, in normal times, unemployment replaces up to about 2/3 of your pre-unemployment income. And so they look at your pre-unemployment income usually over some sort of base period. Sometimes it's a year, sometimes it's a quarter, sometimes it's a quarter within the year when you earned the most money, but somehow they get to a base period amount and then figure out what your weekly earnings are based on that base period. Then states often further adjust what they pay out under unemployment. So most states don't pay 100% of what your pre-unemployment earnings were. The most generous states I've seen pay 66% of your pre-unemployment earnings. The least generous state, I think, pays 47% of your pre-unemployment earnings. So there's a little bit of an adjustment that happens. I also want to make sure that you know that unemployment is considered taxable income to you, even right now. So that means at the end of the year, you will get a 1099 from your state reporting how much they paid to you. So file that away so that you remember that this does count as taxable income to you. So we know that unemployment is special and different right now because of three unique programs that were introduced as part of the CARES Act. The first one is Pandemic Unemployment Assistance, PUA. This is the program that basically offers unemployment insurance to people who would not normally qualify for it. So this is mostly the individuals I work with, those who are self-employed or contractors or freelancers or gig workers in any sort of capacity. It is this Pandemic Unemployment Assistance Program that expands eligibility to you. The second new piece that was introduced under the CARES Act is the FPUC, the Federal Pandemic Unemployment Compensation Program. This is the part of the program that gives you $600 extra per week above and beyond what your state's unemployment would normally be, right? So if you live in a state that pays you 50% of your unemployment income, you would calculate that amount, and then you would add $600 to that under this FPUC program. And then the third program is this Pandemic Emergency Unemployment Compensation piece. This is the piece that changes the time period from 26 weeks to 39 weeks. So it basically allows individuals to claim 13 extra weeks of unemployment. Now, the effective dates for these programs are down there. The PUA can be backdated as far back as January 27th, depending on when some of the impacts started to affect these individuals. But the $600 only applies during the time period listed here, right? From the end of March through the end of July. And of course, the extended period goes or can go through the end of this calendar year. So what does this all mean? Unemployment now covers more people, it gives more money, and it lasts longer, all of which is really good, but the systems aren't set up to account for that, which is why we're seeing a lot of delays in how people are going about filing for unemployment in various states. And of course, this is all still administered by the states and territories, right? And many of them are still waiting from federal guidance from the Department of Labor to make sure that they're in compliance with whatever regulations are introduced with respect to verifying pre-unemployment income and verifying eligibility, right? So we're seeing states kind of attack this program or attack this problem in a lot of different ways, which is also creating some confusion. So I've looked at probably about 25 different states so far, mostly based on where those individuals I serve live and work and are diving into this. And in general, the 1 week waiting period has almost universally been waived. I hate to say that every state and territory has waived it because there's probably an exception, but everyone I've looked at so far has waived that 1 week waiting period, which means if you are effectively unemployed, based on however your state defines that, you may apply for unemployment the next day. You no longer have to wait a full week, which is kind of nice. All the states so far I've looked at have waived the requirement to be actively looking for work, which is really, really nice because it's hard to be actively looking for work right now for any number of reasons. This is an important thing to note, though. The questions that you have to answer each week when you recertify your eligibility, you may still have to say, yes, I am actively looking for work, based on or to move forward in the process and continue to be eligible. New Jersey is a great example of this. New Jersey actually has a frequently asked question that says, you need to answer yes to the question, are you actively looking for work, so that you can continue to claim unemployment, right? So understand that most states have waived this requirement, but the questions still might be a little funky. So definitely get your hands on frequently asked questions or some guidance from your state to make sure you're accurately responding to the questions in the way they want you to. Now, what's interesting, in many states, this automatic extension of benefits automatically applies, which is kind of great. But in some states, it doesn't. So Ohio is a great example of this. After you run out of your 26 weeks of unemployment in Ohio, you have to reapply for this extra 13-week period. So file that away if you are an Ohio-based performer or artist or dancer or musician or any sort of other creative individual, right? It's not automatic in Ohio, although in most other states, they are just automatically tacking on the extra 13 weeks to the end. The other interesting thing is in all the states I've looked at so far, the $600 is automatically being added to what you are eligible for each week. In some states, it's coming in a separate check or a separate direct deposit. Most states, though, are lumping it all together. So if you live in a state where you get a debit card with refillable benefits, for example, it's probably all being loaded onto that debit card, which is kind of nice. But again, pay attention to what your state is doing because each state is attacking this in a little bit different way. So as we've been going through some of these questions with clients and in reviewing a couple of the questions that came through last week, there are some sort of key stumbling points that people are running into. And the first one is, how in the world are you calculating base earnings? Now remember, normal unemployment is based on what you earned over a period of time, the base period in your state, and then adjusted in some way, right? Maybe it's cut in half, maybe it's divided into a weekly amount, whatever. The general approach to this is still going to apply if you are self-employed, right? So what you want to do is figure out what the base period looks like in your state. And the best way I've found to do that is to look at the handbook for the individuals who are applying for unemployment under normal circumstances, because there will be a section in there where they explain what the base period is and how you look for and calculate the weekly benefit you are eligible for. And I know it's different because this is not normal unemployment, but still get your hands on that handbook because they will still calculate base earnings in probably the same way. I would also encourage you to remember that when we're thinking about applying for unemployment, the states don't necessarily care about how much income you have lost for, the month of April and May of 2020, for example. They're looking at how much you earned during a previous period. Usually it's January through December of 2019 right now. So they want to see what you earned during that period, and then they're translating that into a weekly amount that you could be eligible for, right? So figure out what base earnings are in your state, spend some time with a calculation. It's not always intuitive, but that's what you're looking for, sort of the normal guidance for unemployment from your state so that you can calculate your base earnings. The next big stumbling block that's coming up for a lot of people is, how do you prove what your base earnings were if you were self-employed? Because you don't have pay stubs to submit to the state necessarily, or other filings that the state would normally be looking for. Your tax return from 2019 seems to be the most popular way states are wanting you to prove your self-employment income. So this would probably be your Schedule C that would show your total earnings for the year, plus all those ordinary and necessary business deductions. Now, your unemployment should be based on that gross amount, that top line number, instead of the net amount that you got to keep. But different states are approaching it differently. I would suggest getting a hold of your tax return. That's going to be your best bet to submit to the state. States are also accepting 1099s, invoices you may have sent out to clients, maybe contracts. If you have maybe QuickBooks or a different system that tracks your income and expenses, they're accepting that as well as documentation of those base earnings. So spend some time figuring out kind of what you have and what would be the best way to kind of prove your base earnings, and then see if that will work for your state. Also, almost all states do have a frequently asked question part that does address this. So I'd encourage you to kind of scroll through that section for your state as well. Virginia, for example, is saying, you know what, don't submit any paperwork to us yet. just give us a second, we'll sort of figure it out. And New Jersey is saying, give us 2 years of tax returns, right? So it does vary from state to state, but generally a Schedule C is probably going to be your best bet if you've got it. And again, they are looking to validate or substantiate your income from that base period, not necessarily what you have lost for this year in particular. So keep that in mind as you are filing for unemployment. The next question that comes up a lot, especially if you are unfamiliar with the unemployment system, is do you have to recertify each week? And the answer is yes. You do have to regularly, usually online, although some states have a phone number as well, you have to recertify each week to prove that you are actively looking for work and that you are still unemployed and that you still should continue to receive benefits. So once you are in the system and you've started receiving benefits, definitely make sure you are recertifying each week so that you don't miss a few weeks in the middle because you forgot to call in or recertify online. As part of this recertification, each state is asking you about any earnings you had during the week. So you definitely want to be reporting any earnings you had. This question comes up a lot if someone, maybe a visual artist, sells a piece of work or something during a week. Does that mean they can't claim unemployment anymore? And the answer is no, it probably doesn't mean that, but it does depend on the state. So in your state, you would want to report that sale as income, and then your benefits could be adjusted accordingly. And here's that frequently asked question. Most states do allow you to sell something or earn some amount of income while you are unemployed, but your unemployment benefits start to go down as the amount of income you earn goes up, right? And again, these vary based on different states. So I pulled out just 3 examples just to show you how different states are treating this. In North Carolina, as long as you earn 20% or less of your unemployment benefit, you still get your full amount. In Virginia, you can earn up to the amount of your unemployment benefit plus $50 and still get your full benefit amount. In New York, though, you have to earn less than the maximum unemployment amount, which is $504 per week in that state, right? So what you want to do is just know and understand what your limits are in your state, and then act accordingly, right? For some people, that means kind of looking around and saying, okay, I don't want to modify what I do or sell prints instead of originals or something like that. So I'm just going to maybe pause sales until things start up again, right? Which is okay. Other people are saying, you know what, I'm going to keep my shop open. And if I sell something, that's great. If I don't, I'm just going to continue to claim unemployment. That's okay as well. Just make sure you know what the rules are in your own state. The timing of this is also kind of interesting. So in some states, and this is a very few states, they care about when you get the cash. Most states care about when you earn the income. So let's pretend you sell a painting this week. That state would care about the fact that you made the sale, not necessarily that you got the cash, because you may not get the cash for a couple of more weeks, depending on when the client is going to pay you. So states typically care about when you have earned the income rather than when you get the cash. And this can be kind of confusing. I had someone who was offering online music lessons, and their question was, okay, what if I sell, say, 3 weeks worth of music lessons in some sort of package in advance, and a parent pays me some amount of money, but then I deliver the lessons over the next 3-week period, right? The state, if the state cared about when you earned the income, they would want you to take that cash and essentially divide it by 3 weeks. So you would report a third of it in the first week, a third of it in the second week, and a third of it in the third week, right? Because that's when you were earning the income. But this is really confusing, and it's not necessarily designed for self-employed people. It's more designed for people who get a paycheck, right? So I would expect to see additional states addressing this with more clarity over the next couple of weeks. So it's something to just kind of file away and pay attention to. The difference between earning the money and getting the cash matters for unemployment purposes. The next question is, how are you supposed to answer questions that weren't designed for me? And my answer is patiently and calmly, right? Because I know this is a frustrating process and it's really, really frustrating for people, and I get that. But my advice would be definitely read through all of the guidance your state offers before you start your application. Because chances are some of the questions, even though they weren't designed for you, there may be advice from the state on how you're supposed to answer those questions. And if you're in the midst of applying, it's hard to pull up the guidance and kind of make sense of it. So take your time before you get ready to get into the system. Read through those handbooks that the states generally publish, read through the frequently asked questions, and then just kind of take a breath and do your best. Most states are understanding that there are a lot of nuances that they haven't thought of yet. And unfortunately, self-employed individuals are sometimes the ones helping them figure out that there are questions that still need to be answered. So I pulled up 3 examples of states based on where most of you seem to be coming from. I pulled up Ohio, New Jersey, and New York just to kind of walk you through 3 very different examples of what these programs look like in different states. And yours probably looks similar if you're not in one of these states. If you do want to drop your state into the chat box, I'll make sure to include it for next week, and I can send you some screen grabs as well in case I've already dug into that state. So this is what Ohio's website looks like. The links are all there. And what's interesting about Ohio is they have this section, it's a special page devoted to expanded eligibility. That's where you probably want to be. Regular individuals have normal unemployment benefits, but this expanded eligibility is the part that affects creative individuals that I'm working for. The Pandemic Unemployment Assistance Program in Ohio is still coming. The registration opened Friday, April 24th, but that just means you're kind of getting in line, right? If you are eligible for regular unemployment, so you were laid off from a regular W-2 job, you can go ahead and file at unemployment.ohio.gov. But if you are self-employed or part of that expanded eligibility, you can go ahead and register under cares.unemployment.ohio.gov, but you're not going to be able to necessarily start getting your money until mid-May. This is you just kind of registering and getting in line. However, in Ohio, if you have specific questions about that expanded eligibility, they have a dedicated phone number that you can call for support. Phones in general have been backlogged right now because it's a crazy time and lots of people have questions, but this phone number is for dedicated pandemic unemployment assistance as opposed to regular unemployment questions. So file that away if you have some questions. In Ohio, you get 50% of your weekly wages for the base period. So if you're applying right now, the base period you're looking at is January through December of 2019. So again, your Schedule C from that year is going to be a really good way to substantiate that. You do automatically get your extra $600 in Ohio, but it comes as a separate deposit. So file that away as well. You'll see it in a slightly different way. Ohio has answered in a frequently asked question that the acceptable proof of employment could include W-2 forms, but you probably don't have that if you're self-employed. Same with pay stubs. They will accept earning statements like a profit and loss statement, any bank records that you might have, or your tax return. In Ohio, that extra 13 weeks of unemployment is not automatic. So mark your calendar and know that you have to reapply when your regular unemployment of 26 weeks runs out. And then you do have to recertify each week. This is what the normal guide to unemployment looks like in Ohio, and the link is there at the bottom. Quick reminder, you are going to get a copy of these slides if you want to file these links or follow these links, or find a comparable version of the handbook in your state. Almost every state I have looked at so far does have some sort of guide to unemployment under normal times. Skim through it, especially when it comes to defining what your base earnings are going to be, because it's a really, really helpful guide. Ohio also has these quick tips and a step-by-step guide. A couple of other states have these as well, and they will actually show you what the forms look like that you're filling out online and give you some Q&A for what they want you to put into the forms at different places. So these are the type of resources you want to review before you start the application process, so it's not as frustrating. For those of you in New Jersey, this is what your page looks like. And I found in New Jersey, if you go to the page and then just hang out for a second, there will be a pop-up that directs you to the Pandemic Unemployment Assistance page, and that's probably where you want to be. New Jersey is different than Ohio in that in New Jersey, you have to apply for regular unemployment first. And this is true about a handful of states. Some states require you to be in the unemployment system, and then they will kind of sort you into pandemic unemployment assistance. Some states require you to apply for unemployment and then get rejected so that then you can apply for pandemic unemployment assistance, which is really, really frustrating because if you go through the process of applying, you don't want to have to be rejected only to start over again. Ohio's is a little bit different. They have a separate portal where you apply for pandemic unemployment assistance. The same is true in Pennsylvania, for example. So New Jersey is building out their PUA system. They don't know when it's going to be ready. We're seeing a lot of states get them ready, maybe end of this week, early next week. But I just got an alert from Maryland earlier today that theirs is delayed more than they wanted it to be. So they are sharing their apologies and their empathy with their citizens, but it's just taking a little bit of time because this is a really new process. And as you've seen from the weekly unemployment numbers, a whole lot of people are applying for this assistance right now. The New Jersey unemployment benefit is 60% of your weekly wages. Remember, in Ohio it was 50%, New Jersey is 60%. And what's interesting about New Jersey is that even if you had a business, so a Schedule C, and you had a loss last year in 2019, your base year, you are still eligible for the minimum weekly unemployment amount in New Jersey, which is $213, which is really fantastic because New Jersey recognizes that, okay, if you're running a business, you need to be getting the minimum amount because you can't run your business really successfully right now. And remember, above and beyond that minimum amount, you also get that extra $600 a week. So this is really, really a game changer for a lot of small businesses and individuals. New Jersey wants you to have your tax returns from last year and submit those to the system to substantiate your unemployment. Your extra $600 is automatically added, which is really fantastic. And New Jersey has shared some guidance as well that if you have gotten a confirmation from their system or a confirmation number, just give them some time. They will be in touch. But it is possible that you may have been rejected by mistake before the Pandemic Unemployment Assistance Program went live or began to get ready to go live. So for some people in New Jersey, if they applied really, really early on, New Jersey is saying, go ahead and reapply for unemployment just so that you can be in the system. My advice, not that I'm giving you advice, but my advice would be if you are in New Jersey and you got rejected really early on and you are self-employed, maybe give it another week or two to see if their PUA system goes fully online, because that you kind of want to wait for it to be fully online before you apply again. New Jersey has an application guide that's really fantastic. This one is the most detailed one I've seen, where it goes through every single question and gives you advice on what to answer for each question as you're going through the process. Because New Jersey recognizes that not all of these questions apply perfectly to every individual, so they've tried to answer the questions in this application guide, which is really helpful. Also, fun fact about New Jersey's process, if you cannot finish your application, you lose internet connection or you have to go do something else, you have to restart it from the beginning. So make sure you're giving yourself enough time to finish it. You do have to certify that you're still eligible each week. And this is that question I was talking about where New Jersey is actually saying, answer yes to this question that you are actively looking for work, even if you are not, right? If you are unemployed because of coronavirus or COVID-19, they want you to answer yes to this question as part of the recertification process. Here's New York's page. It looks remarkably similar to other pages. You will start to see almost all these states look the same, with the exception of a special kind of alert bar somewhere on there that directs you to pandemic unemployment insurance or the CARES Act or something similar. New York has this flow chart. You'll see something similar in a handful of other states, Pennsylvania, Virginia, Texas. They started sort of visually presenting these different unemployment options, which many people have found to be very helpful. So if you want a quick peek at this, this is what it looks like. It sort of breaks down: if you are regularly eligible, do this. If you are only eligible because of pandemic unemployment assistance, go ahead and do this. Go ahead and file a new client claim online at my.ny.gov. New York is asking that you use their website only on certain days that correspond to the first letter of your last name. They're trying to do this to streamline some of the web traffic a little bit, just so the system doesn't get quite so overloaded. New York also looks at the highest quarter wage from the base period, and then their maximum weekly benefit is $504. If you are applying right now in New York, so you're applying in April, May, or June of 2020, your base period is going to be calendar year 2019, so January through December. You do have to recertify each week, and you can still get partial benefits if you are not totally unemployed, or if you sold work or did something extra. And like most states, your unemployment insurance is backdated to the day after you became unemployed. New York also has this great self-employment guidance for self-employed individuals, which is really helpful. And again, it's providing frequently asked questions and some additional support for individuals that the system was not necessarily designed for and who may not be really familiar with the different options here. We have a question in the chat I'd love to address from Kay. Thanks for your question, Kay. When you applied for PUA as a self-employed person, it asked, how long have you been separated from this employer since this date? And then did you have to stop working because of COVID-19? You're not separated because you're self-employed and you work at home, but you can't do any business because of the stay-at-home orders. So how long have you been separated from the employer? If your business stopped effectively because of the stay-at-home order in your state, I would say, so let's pretend the stay-at-home order started March 23rd, then March 24th would be the day that you were sort of separated from your employment, assuming that for you, you had to stop work because of the stay-at-home order. If it's a little fuzzier because you just saw that that's when your business really kind of stopped, you could probably also use the same approach. And I see Michigan, North Carolina, Indiana, and West Virginia all in the chat. I'll make sure to pull up your states and share some resources from them for you next week. So, quickie summary of sort of this coping with COVID unemployment. Different states are approaching this differently. Some states are combining this PUA program with regular unemployment. Some are keeping them separate, so you apply for either one or the other, but not both. And some states are requiring you to be rejected from unemployment first before you apply for pandemic unemployment assistance. And I'm seeing a lot on social media and also in my inbox that artists and creative people are really frustrated with this because they're trying to go through the process and answer the questions honestly, but it's not necessarily clear in every single state how you should go through this process. So forgive yourself and give yourself time to read through all the guidance before you start your application process. In talking with some individuals, it seems like people are trying to answer the questions honestly, but they're not necessarily answering them in the way the state wants them to answer to be eligible for PUA. So read through the guidance at first, and then go ahead and answer all the questions from an informed place. And that should help you kind of navigate the system effectively. Keep in mind though, especially for pandemic unemployment assistance, very few states have actually started paying this out yet. some states have said, yeah, keep going. You're totally great. We got you. Other states are saying, okay, just kind of wait a second because we'll do our best. Ohio, for example, expects to start paying out benefits in mid-May. Now, these benefits are retroactive, so people are going to get the money they're eligible for, but it might take some time. So be patient. Definitely look through all those frequently asked questions and answer to the best of your ability. Get your hands on whatever handbook exists for your state. It's usually a PDF file somewhere on the unemployment website, and it answers a whole lot of really helpful questions, including what your base wages are and how you would calculate those under normal circumstances. So you can kind of think about how that might apply to your business in case your state hasn't directly answered that question. I would also look for some sort of list of frequently asked questions. Almost all state websites and territory websites have this somewhere. So definitely skim through, see if you can find it. It's not always easy to find, but if it's not obvious, usually a search will kind of lead you there. And then if your state is one of the states that has kind of a custom application guide, definitely get your hands on it, use it, love it. They are super, super helpful. I see in the chat, Jillian, yes, I will definitely add Texas to the mix. And then Kaisha says, if you made online sales in a given week that would exceed your income limit, you're in North Carolina, would that disqualify you completely from that point moving forward, or only negate my benefits for the week? It should only negate your benefits for that week, but you may have to sort of reapply the following week, depending on whether your state totally kicks you out. Most states don't do that. You just recertify every week. And in a given week, if your earnings exceed what's allowed, you just wouldn't get anything for that week. And then the next week, you would go back to your normal earnings, right? Again, though, this is not totally fleshed out because we don't have a whole lot of anecdotal evidence of this working for people yet, but that's the way it's supposed to work. Great question. And Karen shares that in Indiana, you have to be rejected before you can apply for PUA. I'm sorry, that's frustrating, but we get it. Yes, you applied, you were rejected. Congratulations. And then you filled out the PUA form. Does PUA work the same way as the state unemployment when it comes to you making money while on it? Yes, it should. The same guidance should probably apply because PUA basically says, okay, same unemployment rules, just for more individuals. So if you are giving online talks that you're getting paid for, yes, you do have to report that income. And will that kick you off PUA relief? It shouldn't kick you off permanently. It may just affect what you're eligible to get for that particular week. So let's say, your regular unemployment benefit is what it is, and you give a talk online, and then you get paid $500 for giving that talk. You would report that amount, and then you would lose your PUA for that week, but then the following week you should be able to get back on it. Oh, great question from Greg. How does this work if you work in 2 different states? Oh, that's such a great question. I should have put that in the key questions that have come up because you are definitely not the first person to ask that. What I've been suggesting is start with the state that we would call your tax home, which is probably where you live and probably where your business is based. This is coming up or bringing up some interesting questions for people if maybe they registered an LLC and then they moved and they didn't necessarily update their LLC to be in their updated state, right? Sometimes processes like this are maybe highlighting some sloppy record keeping practices we may be guilty of. But what I would suggest is start with your home state. And I'm assuming, Greg, that all of your income is self-employment income. So most of what you're doing might be in whatever state you're based in, but then maybe you traveled to a different state and got a 1099 from a company in that state or something, right? As long as we're talking about all 1099 stuff, start with your home state and then go from there. What if, though, let's pretend you live right on the border of 2 states, for example. So maybe you have a W-2 job in one state, but you live in the other state. If you were laid off from that W-2 job, all of your unemployment has probably been paid into the state where you worked. So in that case, you would want to start with applying for unemployment in that state. Also, individuals, let's say you live in DC or Maryland and there's very close proximity, what you would want to do is sort out, first of all, are we talking about W-2 jobs or are we talking about self-employment? And if we're talking about W-2 jobs, you would want to apply in the state where you worked, because that's where your unemployment probably would have been withheld. If we're talking about self-employment, then you want to focus on where your tax home is, which is where you live and probably where your business is based. Maria's question, you have a fellowship 1099, but it's very, very small. Are you ineligible for PUA in California? As of what date do they check? Great question. You are otherwise non-income except for this stipend. Maybe I can assume that the stipend came in like sometime in 2020, in which case in California, they're looking at your base earnings for the year 2019. So that 1099 wouldn't be part of your base earnings for unemployment. Now, what you would want, oh, it came in last week, that's good. So what you might want to look at is thinking about the day that you became separated from your employment. I should say as well, if you are a full-time student, usually full-time students are not eligible for unemployment, although it is possible that the expanded definition under the CARES Act might make you eligible. Or if maybe you had a part-time job and you no longer have a part-time job, you could still be eligible for unemployment in that regard. But in California, you would want to look at the base earnings period, which I believe is calendar 2019, and then base your unemployment on that. But again, for any given week, you would want to report any gross earnings you had so that you're making sure to not draw on the benefits if you're not eligible to receive them. I'm not sure if I totally answered your question, but we can follow up offline if you have more specific facts you want to share. Okay, I'll pause for a second. Oh yeah, good, there are more questions coming in. Are you still eligible if you were called back to your crummy part-time job after being laid off last October, but could not work due to being in a high-risk group for COVID-19? Yes, you are probably still eligible. Without knowing the total, complete details and full situation, the CARES Act, as part of this expanded eligibility, does include eligibility if you are unable to work because of COVID-19 or because you are providing care to someone or for other benefits. So definitely dig into that within your state, Linda, because it's probably, you are probably still eligible, which could be a really good option for you. Great question from Andrea. Could I talk more about gross earnings to report as income? This is a fantastic question. Basically, the question is getting at, if you sell a $100 painting and you had costs of $20 into materials and shipping, do you report $100 or do you report $80? Such a fantastic question. When we are looking at earnings that your unemployment would be based on, we want that to be the highest number possible. But when we're looking at the actual amount you are getting during your unemployment period, then we want to be looking at that net amount. Now, I do want to share a big caveat here. States have not fully weighed in on this yet. If someone has seen a specifically FAQ or an FAQ that's specifically answering Andrea's question, definitely throw it in the chat. I haven't seen one yet. My guess is, and what I would suggest is report net, because if you sell something for $100 and you have to put in $20 of materials and shipping into it, really what you got was $80. So that's what I would suggest reporting as you report weekly to recertify your unemployment, but also pay attention and stay tuned. It is very possible states will come out, or the Department of Labor will come out with different guidance. I don't know that anyone's really clearly answered this question yet, but when it comes to reporting your earnings for each week, if you're selling things, you want to subtract out the expenses associated with that when you're making those reports. So I hope that's helpful. Karen, you had a talk that was supposed to happen in early March, but it was postponed. You're going to give the talk next week. Congratulations. I think that's great. Oh, the check they sent you was from early March. Should you report the check for next week, or can you just go by the date of the check? So if you live in a state where they are looking at when you earned the income, they're going to want to see that next week in your earnings. If you live in a state that cares about cash flow, then you could have reported it in March, and you may or may not have been unemployed at that point. But if you live in a state where they care about when you earned the money, they're going to want to definitely see it in next week when you're giving the talk. I'm sorry. Okay, I'll pause for just a second in case there are more questions coming through the chat. It's possible that someone is furiously typing. You are very welcome anytime. Okay. Is there still PPP? Such a great question. When we started the webinar, my understanding was that the PPP money had not run out, and we're talking about the additional sort of second funding of PPP. And this program, of course, is the Paycheck Protection Program, where you can borrow money from the SBA through your local financial institution, and then that loan is forgivable as long as you use it on payroll replacement or rent or utilities. So for many individuals, this is a really, really good option because it essentially replaces 8 weeks worth of income plus some expenses for other things. And that might be more appealing than unemployment, depending on where you live. Question in the chat, are there other places to look to apply for PPP, or is one place good enough? Great question. My advice, first of all, if you have a relationship with a credit union or a local or regional bank, those tend to be the banks and the financial institutions that are processing these PPP applications the most quickly. So if you have a relationship with one of them, start there. If you don't, the SBA has a tool on its website, that's smallbusinessadministration.gov. They have a tool where you can find an eligible SBA lender near you. So you can sort by zip code and then pick a regional bank or a credit union that might not necessarily be the national bank that you already do business with. So you could find another potential partner there. You may file or apply with multiple lenders, but you can only accept one. And as soon as you are in the PPP system through the SBA, any other applications you put in will automatically be rejected. So yes, you can apply from more than one place if you'd like, but know that you can only receive the money once from one bank. So that's really kind of up to you how vigorously you want to kind of pursue it. I would say if this is something that makes sense for you, go ahead and file. Someone who has been on the chat regularly shared that her bank told her when she was applying for the first round that she was number 100,000 something in line for this money, right? Which is just an insane thing to be told. But if this is something you're thinking about, go ahead and apply because there is a good chance that this funding will also run out probably relatively quickly. So you definitely want to be in the queue if it's something that makes sense for you. This is what the application looks like. It's a really short, relatively easy application. It's about 4 pages long. It's a PDF file. You can fill it out online, submit it electronically to your lender, right? All sorts of good options here. But I want to draw your attention to this question sort of in the middle. It asks you for your average monthly payroll, and that trips people up, especially if you're self-employed, because you might not have an average monthly payroll, right? So what you would want to do, and this was in the guidance that was shared by the SBA, what you want to do is look at your own Schedule C from 2019 and look at line 31. That is your net income after all of your expenses. They want you to get that number and divide it by 12. And that's how they are calculating your average monthly payroll if you are self-employed. So if it's just you hanging out and you're a sole proprietor or a single member LLC, so you're the only owner, you're going to look at Schedule C, line 31, and divide that number by 12, and that will be your average monthly payroll amount. Now, if you're an LLC with multiple members, right, or a partnership or an S Corp or any other type of business that has self-employment income, you might have two separate calculations to get to your average monthly payroll amount. You might have the self-employment piece from you and all the other owners of your business. You take that number and then divide it by 12. That's the average monthly payroll amount to the owners, right? Who, remember, aren't getting payroll per se, but that's how we're getting to their payroll amount. And then if you have employees, you also might have payroll to them. So you would take your most recent quarterly statement, your 941 that you would file to report your quarterly payroll, and divide that by 3. So that's the monthly payroll amount for your employees, plus the self-employment piece for the business as a whole. So this calculation does get kind of complicated. Again, if you are a sole proprietor or single member LLC, line 31 on Schedule C divided by 12, and you're done. If you are an owner that has other co-owners, and or if you have employees that you pay salaries to or pay hourly wages to, then you want to add both layers of that into your average monthly payroll amount. Question from Hannah: what if line 31 was negative because of high expenses in 2019? In that case, you're probably not going to be eligible for PPP because PPP does require that you have a positive average monthly payroll amount there. So if that's negative, that's probably not going to be a good bet for you. I do hope, though, that you live in a state like New Jersey that says, okay, if your earnings from self-employment were negative in 2019, you are still eligible for the minimum weekly unemployment amount. So fingers crossed, Hannah, that you live in New Jersey. If not, we can dig into maybe what your state says specifically to see if you would still qualify for unemployment, because you probably would. The next piece of this calculation, and you can't really see it because I've drawn all of your attention to the average monthly payroll amount, but the next piece is the additional amount you're going to apply for. So for PPP, you can take your average monthly payroll and multiply it by 2.5. Not 2.5%, but you multiply it by 2.5. So let's pretend my Schedule C from 2019 had $12,000 on line 31. That means I would take line 31, $12,000 divided by 12, and my average monthly payroll amount would be $1,000. That means the maximum amount I could get through a PPP loan is $2,500. That's 1,000 times 2.5. I can borrow $2,500 through PPP. Now I can spend that money on my own payroll, which, remember, I'm paying myself. My average monthly payroll was $1,000 last year. So I could give myself payroll of $1,000 per month for the 8 weeks following my PPP loan, right? And I could just transfer that from my business account to my personal account. That would be what I'm spending the money on for payroll purposes. So that would be $2,000. And then I would have another $500 to spend on rent, say for an office space or studio space, or utilities. The quirk here is that you have to have those expenses on your 2019 Schedule C in order for them to be forgivable under PPP. So PPP doesn't want you to go out and rent a studio space or rent a larger studio space. They're just looking for you to maintain the expenses that you had in 2019. So what some people are doing is they're saying, okay, if I had this average monthly payroll amount, but I don't have a studio or I don't have utilities, I don't want to borrow 2.5 times my payroll amount. I only want to borrow the payroll amount so that all of the loan is forgivable. And that is perfectly fine. You can definitely make that choice, but just make sure you're making that choice on purpose. And then the third part of this line is the number of employees. Again, if it is just you hanging out, sole proprietor or single member LLC, the answer to this question is 1 for you. Even though you're not really your own employee, that's how they want you to answer the question. So file all that away if PPP is something you're still thinking about. A question in the chat. You've been trying to figure out that 2019 Schedule C expenses are the only ones forgivable everywhere? Good question. The forgivable expenses are payroll, lease, rent payment, or your interest on a mortgage or utilities. But those are the only things you can spend PPP on in order for it to be forgivable. Jillian, I think this connects to your question. Could you use it for other business expenses like materials, software, research? No, you can definitely not. I'm sorry, I wish you could, but you can, well, let me say that differently. You sure can. You can use the money on anything you want, but this is only forgivable, meaning you don't have to pay it back if you use it for payroll, lease or rent, and utilities. If you use it on anything else, you have to pay back that portion. It's a loan instead of a forgivable loan. And my goal for you is for this to all be forgivable so that you don't have to pay it back. So that is my goal for you. Try not to pay it back if you don't have to, because goodness knows most people don't need more debt. Stimulus checks are continuing to go out and be direct deposited. One question I did as I was just glancing through the list earlier today, one question came in and someone said that their payment status is either still pending or not available. I'm increasingly hearing this from people, and I know it's really, really frustrating because the IRS added this, get my payment kind of feature where you can check the status of your payment. If yours is still not available or pending, or it feels like it hasn't been changed in a while, the IRS has added some really helpful sort of FAQs to help you know if you need to update your banking information or enter additional information, particularly if you were someone that did not file a return for the past 2 years, maybe you weren't required to, or if you were someone that needed to, maybe you always paid and you never got a refund, so you needed to provide banking information. So for that person, I'd encourage you to scroll down a little bit further because the IRS has some instructions on what they would suggest that you would do. So your next steps for this week is to take a deep breath, get to know your state's unemployment office and website really, really well if unemployment is something that you think you might be applying for. Definitely remember that you are part of a community and you can draw upon all that community support, and then keep doing the math as you are planning out your expenses and your income and kind of figuring out what the next couple of months are going to look like for you. Couple more questions in the chat. Jillian works out of your home and you weren't going to include it on your Schedule C because it's such a small amount and you didn't want to bother. But if you're applying for PPP, it sounds like it would be smart so you could use the funds that way. Yeah, that's not a terrible idea, but it kind of works in two directions, Jillian. So think about it this way. Your PPP amount that you can borrow will be lower if you do include your home office deduction, right? Because that line 31 is after your home office deduction. So the amount you can borrow will be lower, but you could use some of that funds, some of the PPP funds to pay for your rent in your home studio. So you maybe want to do the math both ways. Personally, I know that home office is one of those items that you really have to comply with the letter of the law as you are deciding whether or not to deduct it and whether or not you meet the criteria to deduct it. So for you, you may decide that having a higher line 31 amount actually works out better for you. But I would suggest just, do the math. And if your gut was saying, yeah, I'm not going to worry about home office or home studio deduction, I'd probably let it go. Another question in the chat. This person, Andrea, you said the IRS said they're not sure if you're eligible for a while, and you were just, it was updated on Friday for you to update and add your banking information. Thank you for sharing that anecdote, because that's such a great example of how you need to kind of keep checking, because these systems are weird and they're funky and sometimes it just takes a while. But I'm so glad that you got moved forward and you were able to add your banking information. So hopefully by this time next week, you will have gotten your stimulus check. That's my hope for you anyway. Quick unemployment question. Is it line 31 that you use for your base pay or the higher pre-expense number? This is a fantastic question from Andrea in the chat. So going back to unemployment, when you are thinking about your base earnings for the period of time based on your Schedule C tax return. It depends on the state. And I know you're so tired of hearing me say that, but for unemployment purposes, when calculating your base earnings on a weekly basis, I strongly believe you should be looking at that top line amount. So like your line 1, basically, that's basically your gross earnings, because ultimately that's what we want to replace for unemployment, as opposed to your line 31 amount, which you're required to use for PPP. So at some point, we are probably going to have additional clarity on that. It probably won't be in the next week or so. So I'd encourage you just to be patient. I would suggest aim for the gross amount for unemployment purposes, unless as you're filling out the information, your state gives you very specific information to do something different. So I hope that's helpful. All right. So today was all about unemployment. Thanks for hanging out with me. I will add those states you requested to the deck for next week. And I'll also just kind of circulate them if I get to it soon enough so that you can have those questions. But definitely get your hands on the unemployment handbook in your state and then stay tuned. And really that's part of this kind of ongoing operation, as we saw from the example in the chat about the IRS, right? These things are moving forward. They are being processed, but it is taking some time. So take a breath, be patient, definitely stay tuned, and keep making great work if you're doing that, and definitely keep staying healthy and taking good care of yourself and others. It was such a pleasure spending a little bit of time with you today. I will be circulating the recording and the slides as soon as we can, and then I will look forward to seeing you all again next week. Thanks so much. Have a great one, everyone.